All right. Good morning, everybody, and welcome. Let's make sure everybody hears me all right, sees me all right. Listen, we're using some new technology for broadcasting. So already got somebody. There's no sound. Believe me, there's sound. There's sound when I want there to be sound. Anyway, sit down. Let me know you hear me all right, see us all right. Can actually show you a little bit about the new player. It's a new player. So our original streaming was a company called Livestream, and eventually they were acquired by Vimeo. So we officially switched over to the new tech. It could be a little bit of a interesting transitions today from myself to Bierman. That may get crazy. Anyway, by the way, if things look a little bit blurry to you at all, down below over here, let me just show you guys real quick. I know we're about to open here, but down below over here, this little sprocket. So you click on the sprocket, you can actually change the quality. I say 720 is what it's all good. You don't really want to see me in higher resolution than that, especially at this point in the morning. It's not a good look for me. It's not a good look. I'm not 1080p quality this morning. I'm not feeling 1080p on a Monday morning. Anyway, welcome. We have just about a minute and a half to go to the cash open here on this Monday. I have to tell you, anybody else surprised that we're exploding to the upside? You almost had to be worried a little bit last night when we reopened to the downside. And here we are, explosion to the upside. And it's all to do with Google and Apple. So there's a Google-Apple negotiation going on. I personally don't think it's going to go anywhere. I'll talk about that more after the cash open. But Google and Apple have a degree of a bid. Google has a big bid, and this thing hasn't done anything lately. Bid back up, but hasn't done anything on a year-to-date basis. Just to show you, it's up basically 2% year-to-date basis. Well, that's all going to change though this morning. Google is the prime suspect to lift the marketplace. Meanwhile, Microsoft is still getting tagged a little bit. Nvidia is obviously heavily involved in this as well because it's AI, man. They said the word. They said AI, but Google is on a percentage basis taking the cake from again from a percentage point of view. We are way over the daily expected move already. I would anticipate some pretty serious volatility. You knew this week was going to be volatile, but why I anticipate that? Look at volatility with the marketplace up 42 handles. You literally have to sit back, and if you're not saying this to yourself, you're totally missing this morning. You have to sit to yourself, holy crap, can that even happen? We're only doing 187,000 contracts, but have you ever seen the S&Ps up some? That's not on time. You ever seen the S&Ps up 42 handles with the volatility not coming off at all? So right at today's bell, the advanced decline line, ruh-roh, Raggy. This was precisely what I was talking about in the weekend update correlation. Check that out. It didn't matter in the video. I was even talking about this too. It didn't matter whether it was to the upside or the downside. You realize that marketplace, they love everybody right now. I love you. Okay, they're loving everything other than maybe some Microsoft this morning, but across the board, we are seeing extraordinarily high degrees of correlation, which stands in contrast to a lot of what we've seen. Okay, yeah, you know what? I don't know. I had a lot of stuff that like reset on my computer over the weekend. It was not the normal horn. Things are weird. Things are weird this morning. Anyway, with that, there's a bid obviously under the marketplace. The marketplace opening rather strong this morning on incredibly strong advanced decline line. Ticks, okay, interestingly enough, not strong. I'm only bringing it up because that actually caught me off guard a little bit this morning. I didn't see ticks not necessarily being strong. Look, the financials here, we're not exactly rotating out of anything, right? And they love everything. Okay, I love everything equally. But this big bid under NVIDIA. Okay, once again, but I was saying on a percentage basis, yeah, Google is the leader of the pack. You're looking at a 6%. Okay, in terms of market cap, this is the stock that's again, this is the real driver for this morning. Yeah, I'm not going to even sugarcoat this a little bit. We're going to look at the SPX almost immediately here. But Okay, look at the gap to the upside, insane. We're gonna look at the SPX almost immediately here. What you are seeing is not only a, almost like fanatical move to the upside, which it is in the first couple seconds of this cash open. I mean, this squeeze is incredible. The thing that concerns me about all of it is there's volatility coming in with markets exploding to the upside. All right, volatility. When I say it's coming in, there's buyers of volatility here with markets to the upside. To say that that's a fever pitch is an understatement for this marketplace. We're watching specific sectors here, at least I am watching specific sectors pretty carefully this morning. Russell ticks have already gone negative. There's no surprise there. If you're actually looking right now at indices like the Dow, and you're looking at the Dow, you're like, how come it's not up? Because it's not market capitalization weighted. Everything that you're looking at right now inside of the S&P is about market cap, right? The financials, they're up 0.3%, which is basically unchanged. The energy sector is up 0.3%, which is relatively unchanged. The advanced decline line is stellar. It's coming off hard and fast though right now. But the fact that we opened into that correlated state, in my opinion, is probably the most critical. Do not be surprised to see some very fast moves in the S&Ps as the day progresses, not just to the upside. You're going to get pullbacks today. It's high degrees of correlation. Check this out, Microsoft. Okay, just came raging back from, I mean, this thing hit 412 in the pre-market just a half an hour ago. This thing was down, okay, by $4. It's now basically flat into this open. Ticks are actually accelerating. I mean, dogs and cats living together. Take a look right off the bat here as well at the SPX. Talk about inflicting some upside damage early in the week. We are already more than halfway home to an upper edge of an expected move. And the big news, of course, this week, okay, is Fed, which is midweek. People keep talking about NVIDIA. Forget that crap. Because what people don't recognize about NVIDIA can totally be buy the rumor, sell the news. Okay. The Fed, though, is the big unknown in there. NVIDIA doesn't really necessarily have any critical unknowns, at least that we know of. But the big news is Fed. It's Bank of Japan this week. And we're making strategic moves prior to that. This is, I mean, I just cannot help but look at the marketplace and just keep thinking, all right, the exact same thing. It's inflationary. It's inflationary. Everything you're seeing to the upside is wildly inflationary, right? And in the Fed's mandate, Fed mandate is not about per se asset prices, but at some point they have to worry about asset prices. This is a vicious move right now, though, to the upside. Just real quick here, you can see the Russell right now, for the most part, unchanged on the morning. I'm just trying to get a feel for Russell as well, because its ticks are flat to negative this morning. And again, the S&P tick is all over the place, right? So you definitely have sell side activity to a degree starting to emerge in specific sectors. Okay, we are seeing a little bit of a rotation right now out of the financials. I would assume that rotation would also come in the energy sector. Okay, we're seeing some degree of rotation. Ironically, you haven't seen like Walmart have a down day like ever, and it's seeing just a tiny bit of sell side activity. I assume that the banks, if anything, the banks are going to slip a little bit this morning as we start to rotate away from them. Again, very, very fast, violent move this morning into the first few minutes. As I said, though, you should see some significant two-sided trade. And I'm basing that, and by the way, when I'm talking about like significant two-sided trade, okay, why? Okay, why am I looking for two-sided trade in here? I'm looking for two-sided trade. Number one, because you have sectors defecting, but number two, the volatility is screaming exactly that. Bonds are kind of taken out of the equation this morning, but it's volatility is screaming that you're going to see two-sided trade. There's without unequivocation, you got to say that there's no reason. There's unequivocally there's just no reason the S&Ps are soaring by 1% and volatility is flat to slightly up, other than anticipation of significantly more movement on a trading session. Now, again, as I said, if you look at the SPX, the SPX this week, and I'm going to do this early on, okay, right now, you're $50 to the upside. What does it take to get to the expected move? So that's a $50 move to right there. Okay, it's another 30 bucks. Okay, you're sitting basically on an $80 expected move this week. The exact expected move is 81.08. If you have any different than that, it's wrong, because that's the expected move of the week. So expected move on the weekly is plus or minus 81.08. Okay, there's your expected move on the week. Okay. In any regard, there's still some people okay, telling me there's no sound. Okay. Oh, there's sound. There is sound. Bear with me here for a second as I how many monitors am I using? A lot. I always use a lot of monitors. This is a 6-monitor system. All right. I'm sorry, I'm just watching the vol here on another screen just to bring this up a little bit. So volatility may be down ticking just a tiny bit, but the volatility that I'm rather infatuated with at this point is here in the VX. Okay, in the VX, in every expiration that you're looking at the VX, it's down like 32 cents. I mean, these things could be getting crushed. The VIX, I mean, again, forget about the VIX. You're basically sitting just off all-time highs, and use the SPX in this case. You're sitting just off all-time highs. I mean, we may crest near all-time highs. I don't think we're going to make it. When I say I don't think we're going to make it, okay, the volatility, the last time we were hitting all-time highs, the volatility has been incrementally creeping up from some of the all-time highs. It's even higher now. I mean, you're sitting at almost a 1450, 15 VIX, okay, with markets near all-time highs. That crap ain't right. It's just not right. This thing is going to get wild. It's going to get wild in a hurry. So stay with me on that front. Ticks have actually flipped over. They've gone negative on the day. And again, there's not too often I come in here, and if you want to bear up right now, the hard place to bear up is inside any of the tech stocks. I mean, it's tough to want to bear up inside of the tech stocks. I think though, if you wanted to bear up today, it's kind of easy to maybe pick off one of these financials. The financials should pull in as the day progresses. Pick your poison, whether it's Wells Fargo, which is already down. They should continue to see some sell side activity in early trade. I'm all paired up with no place to go. Crap, I don't know if we're going to get a good opportunity, but there's got to be a reason. See, the thing that people don't understand well about volatility. And by the way, look, we're 10 minutes into a trading session. Far be it from me to tell you that volatility, it could collapse in the next few minutes. Like this volatility that we're looking at, and yeah, I'm looking at 2-day volatility. Should really be looking at further out vol, but neither here nor there. This volatility, it literally could collapse in the next 10 minutes. Okay. I don't know that. You can't see the future of all, but in the first 10 minutes of trade, when the S&Ps are up 50 handles and you're like, it's a rally, it's the market's flying. Okay. It doesn't make sense that that number's not down a bit more. And that's when, hey, maybe it does come down a little bit more as this day kind of progresses. Okay. But that does not appear to be the case. In fact, the opposite is actually true, that you're seeing both VIX and vol start to bid. Moreover, this 9-day volatility gapped up. Yeah, I saw that one too. The 9-day volatility, this is a short-term VIX. It even gapped up today. Crap does not make a lot of sense on the screen right now. Okay. Meanwhile, the Nasdaq is actually cracking into highs. Okay. This is a Nasdaq, rip, with everything else just kind of getting dragged and meandered up. Speaking of which, hit that one kind of right on. So energy is coming in. The financials, I'm rather surprised the financials are still positive on the day, but we'll see how this thing plays out. So I have a lot, okay, to cover this morning. trading opportunities and so forth aside, there's a lot I'm going to cover on the front of hedging. I've been inundated with emails regarding hedging, and I am going to talk a little bit about, as I put kind of in the schedule, the atomic hedge. If you're unfamiliar with the atomic hedge, well, you're about to get a little bit more familiar with the atomic hedge. I want to cover that. Now, I'm going to cover a couple of other aspects. First and foremost, clearly, I'm going to be deviating and going into some live trade pretty extensively today. I did not anticipate today, okay, to be as rocking as a morning as it is. Again, for those of you, if you're kind of curious what sparked today's rally, look at this. Even a little, just a hint of an up move inside of the dollar. Again, there's days where you look at the screen and you're like, this is all wrong. I mean, it is. It's all wrong today. Everything you're looking under the screen is like, if the dollar collapsed back down, maybe things would make a little bit more sense. If the VIX collapsed back down, maybe things would make a bit more sense. They're not, though. They're not. And the S&Ps are literally up 50 handles right now in the midst of again, a chopped out, very, very fast day. Okay. Yeah. The S&Ps are also, again, I know we're only a few minutes into the trading session here, but they're doing a lot of volume for the S&Ps being up 50 as well. Okay. Everything on here is funky. Okay. Interesting. One person was saying their feed's cutting out now every 30 seconds. I would suggest maybe you lower your streaming resolution. That's the only person I've heard that they're having any streaming issues, because I'm kind of monitoring it right now. By the way, I appreciate any feedback. So we are using new technology right now here at TheoTRADE. We switched over to a new video player. We're using Vimeo now through and through, and all the archives are going to be in Vimeo. It's kind of nice. It's kind of nice. Sorry, I'm just reading over here. Yeah, it's probably somebody's just bandwidth if they're cutting out. Cool. By the way, no, I totally appreciate it. By the way, I was showing this earlier. Somebody was saying not as clear. You can actually adjust your own clarity. It's dynamic. So you can go in there, and we set it though so that you can set it. Meaning, like one of our setups in here, you have to set it. We didn't have it like automatically. So it's dynamic. Like you can set to anything. 720p though is fine. Okay. I'm just going over that again because again, it's a little new to people. Okay. Here come the S&Ps again. Just do not be surprised in today's trade. And again, it's so rare that I've been watching like tick for tick the last couple of trading sessions, because there is some change underway in this marketplace. But do not be surprised today to see a wild bid with a huge vicious pullback at some point in the day. I don't know if the pullback will actually, have teeth to it and we'll continue to see some sell side, but do not be surprised to see that. Okay. This marketplace is bid. Okay. And yes, there's, now there's only 60 stocks traded to the upside. Remember, we started with like, 84, 85 stocks to the upside, and there's only 60 stocks. We're back to this craptastic marketplace. Recognize today, okay, is about Apple. Okay. There's a side order of NVIDIA in here, although NVIDIA today, to be honest with you, is more like Sideshow Bob. Because it's all about Google. Google now is up 7.5%, and let's talk about that one for just a moment, and then I'll actually get into a little bit about the atomic hedge. I only need about 15-20 minutes to recap a little atomic hedge discussion in here. Okay, so Apple is apparently in discussions with Google, and the reason Apple is in discussions with Google is they might use Google's Gemini AI system, okay, for the iPhone. I'm like looking at my phone over here. So they might use that for the iPhone. By the way, if there is one thing and one thing only, okay, that would get me to leave the Apple ecosystem, would be Google on an Apple phone. There's a reason that I use an Apple phone. That's because Google has nothing to do with it and doesn't touch it. Okay. And I actually appreciate that. By the way, if you were to leave an Apple phone, where do you go? There's no other device. You have to go to Google. Hence why Google is up so much today. I don't think people necessarily realize that. When it comes to phones, you have two choices. You can be Apple's ecosystem or Google's ecosystem. You go, no. I know that, one of you guys over here is like, what about the Windows Phone, man? What about the Windows Phone? Okay, yeah, no, thanks. But there are no other options. Otherwise, I'm going back to like my StarTAC flip phone. And I really hope that doesn't happen because that was the one thing that will get me going. Okay. All right, Dimitri, you got me on that one. Son of a! I do use Google Maps, but I turn that crap off in the background. Okay. I had to use Google Maps yesterday. I went places. Here comes the first attempt at some sell side activity. Seriously, this could very well be an attempt at sell side. This volume is funky large for a rally like this that we're not moving. Okay. We are hitting all kinds of extreme levels in here. The financials, though, are coming in now hard and fast. Okay. It's not enough. Like the financials plus energy, people, they're not enough to pull markets in. Something else has to actually has to cough up its cookies. But you're going to see the S&Ps get squirrely today. And I can't tell you about the Nasdaq right now. Okay. Nasdaq can get squirrely, but it's all predicated on what NVIDIA does. So it's good. Okay. All right. Anyway, as I was saying over here, okay, I will not accept Google on my Apple device. I'll be like ripping and separating the AI out of that. Okay. I don't want that thing on there. Okay. I don't let Amazon freaking Alexas in my house. Okay. Not that this stupid phone isn't listening either. Alexa, turn on music. I hope I just pissed off at least 20 or 30 people. I'm hoping. Okay. Alexa, turn on Metallica. All right. It's okay. Okay. It's okay. Anyway. I don't get out very often. Okay, this is what we do for amusement. Anyway, that is what's going on right now. It's why Google, everybody realizes Google then would monopolize all the data. They would be able to see first look at the Apple people, like, oh, we can now see the Apple people. It's good stuff. Okay. Sorry. That's why Alexa's screwed up, because I'm here on the recording on your speaker and it still listens to me. Okay. It should not listen to me. It does. Okay. My kids don't listen to me. Their speaker does. That's awesome. At least Siri is, I think, voice specific. Okay. Although my kids, they have, one of my kids does actually have that, like a little Alexa thing for like kids. That thing says some messed up stuff too. He knows exactly how to make it like messed up stuff. Okay. Say my name. Sorry. Coughing up a fur ball over here. All right, let's get back to business. So Google is wildly bid on that piece of information. Apple, ironically, is wildly bid. Okay, Apple is likely though overdone, and in sell side, it was overdone to the sell side, right? So Apple now it's still down 4%. Another stock that we haven't seen in a while is none other than Tesla. Tesla has a little bit of a bid under it, but it's being faded. I did actually put a bullish catapult onto Tesla this week. So I'm 60 days out, but we're okay. Look, that's something I'm not even going to worry about, but I put a bullish catapult. And for those of you, if you're in catapult, the old catapult, there's a new catapult, but everybody will be merged into the newer system. Okay. Once some of the older trades are wrapped up. Nevertheless, okay, I just wanted to mention my timing in there it's not about timing. Look, I have 60 days left. I like a bullish position in Tesla right now. And I like it because, look, everybody's been, hating this stock every single day for like the last 3 weeks. It's going to have a wild bid back to the upside. And when it does, I want to be part of it. I think that's the bottom line with this. Ironically, though, Tesla's already kind of coming in a little bit off that. What we keep looking at on the screen is like Google, obviously Amazon, Apple. Okay. They haven't really backed off at all. And moreover, NVIDIA. okay, NVIDIA, I want to take you into some trading here because there's call buyers in here, but today, I'll show you something interesting. The volume, we're 20 minutes into the trading day. There's 200,000 contracts already trading. The volume's not as extreme on these calls as you would think. Okay, my suggestion is that stuff like Google is starting to receive some of the activity. Okay, as is Apple. So the love is being spread around a little bit. Take a look at Apple, for example. That, people, is some call buying. This is the kind of crap that we've seen. Look at this, 350,000 contracts. This is the kind of crap that we've seen on NVIDIA. Do not be surprised if NVIDIA doesn't have the firepower today. What I mean by that is, okay, the NVIDIA, I said this earlier and I'll clarify. I said NVIDIA is like Sideshow Bob today, and it is. The contract size and the extreme is going towards Apple, it's going towards Google. And what's crazy about Google is split into two symbols. So for Google to get some love, okay, there's a hell of a lot more contract size. And what this is doing is likely pulling, okay, the rug out from under NVIDIA. There's only so much firepower to go around. And, a great way that somebody, just mentioned the sizzle, okay? The sizzle in here is like 21 times its normal call volume is trading in Google. If you take a look even at Apple, 8 times its normal, call volume is in Apple. But NVIDIA, okay, NVIDIA at this point is like 3, it's nothing. All right. So you're seeing, again, the rug get pulled. If the market's going to pull back, okay, the likely suspect could, in fact, be NVIDIA. To actually cause the S&Ps to have a little bit of a pullback. And the S&Ps, you're looking at them right now, they're starting to pull back. Now, you'll know they're pulling back, okay, because you'll start to see volume really accelerate. Okay, we're nowhere near the kind of volume that I would expect if we're going to accelerate it all to the downside. And frankly speaking, if we're going to have a pullback today, okay, it's there's going to be a little bit of violence. It's going to be fast. It's going to be furious. Okay, there's no question. This is a very fast. Okay, the tape feels broken. It feels disconnected. It doesn't usually feel that way to the upside. To the upside lately, you have this like, oh, I'm going to puke to the upside because it's a slow grind to the upside. This is anything but. Look how fast that move is to the upside. Okay, the trade itself feels like disconnected. You've actually got financials heading lower, they bid up. Okay, you've got the energy sector heading lower, it bid back up. We're seeing kind of like these, offbeat kind of rotations. The advanced decline line has come in substantially. The advanced decline line, by the way, coming in, meaning the advanced decline line is coming down. Don't think for a second that makes a damn bit of difference. These S&Ps could be up 100 with the advanced decline line theoretically being negative. What's interesting about the advanced decline line is that we started in this correlated state and it's kind of getting ripped apart. And that's what I mean by, the tape is broken and disconnected. Okay, we're all over the place right now. And trade like this, okay, this is where you get pretty good degrees of volatility. And again, we're still substantiating almost 5,000 contracts a minute. So I like it. Okay. Yeah, RJ was saying he's having a tough time with thinkorswim. Yeah, there were funky things all over my thinkorswim platform this morning. I noticed a few things in here that were it just didn't look right. Like things also reverted back to a setting that I had a while ago. Yeah, things are not, it's not normal. I don't know what's going on over there. Okay. Again, I have like one buddy that's still a developer there, literally one. And he only touches a small area of this platform. So it's not even worth, I got nothing. Hmm. All right. So onward and upward. So Google, Apple, Tesla, we've covered that. NVIDIA. Okay. Sideshow Bob might not have enough order flow to actually keep the marketplace higher today. So be mindful of that. Okay. 2 other things, okay, that are critical in here. Okay. And that would be, sorry, I'm distracted right now by some of the price action in here. Huh. Interesting. Number of calls being sold is really catching up to the number of calls being bought in NVIDIA. This is unusual for a stock that's up $34 today. Very unusual. Okay. Now look, I know that NVIDIA has like their conference throughout the course of this week. Okay. This is where they get up on stage. Everybody goes, yay. They like clap. It's like a Tony Robbins like seminar. It's freaking brutal. But anyway, there is often before those conferences, because Apple used to always be like a buy the room or sell the news, but Nvidia specifically hasn't really moved up in well since this wild bid to the upside. Okay, it's been flat for about just over 2 weeks. About 2 weeks trade, it's been relatively flat, but the trade is been real fast in there. Very again broken, disconnected, as we're saying. But that gamma trade is not carrying Nvidia to new heights. Okay, this marketplace right now is being bid up. Okay, on some of the old kind of generals in the marketplace, and that's fine. But again, be aware, Apple, a little bit of a pullback. As I said to you, when that pullback comes today, it's going to be fast, going to be furious, and volume is going to be a big tell. And here comes volume right now. Okay, I don't know if this is the break. We'd have to break through right here, this cash open, and then we see some sell side that would start to persist. Anyway, okay, onward. So onward from there. Throughout the course of this week, you're going to have to deal with some pretty big time news. So in the SPX, okay, first of all, as I said, that there's an $80 expected move, 81 to be specific. 81.08 is the expected move. Where are we right now? I mean, this is crazy because you're like 20, 30 minutes into a trading week. You're already halfway home to the upper edge of the expected move. So you know right out of the gate, this is going to be a pretty volatile week. Now, the term volatility, okay, do not, okay, be at all like misled. By the way, Ron, never put ES put call ratio in there. The ES, no one cares. Okay, the ES doesn't drive anything. It's only the ES, okay, itself. The ES futures contracts moves things, okay, but it's the SPX that matters. The put call ratio that's I guess time for, well, better saved for another time. But don't be looking at put call ratios in the S&Ps. Should always have more puts trading in the S&Ps, okay, because the product is actually used for a hedge. I'll just dig into that for a second. This product is unequivocally always used for a hedge. So the put call ratio, okay, should always look like, oh, there's a little bit more puts trading. The sizzle index is far more insightful. Okay, there's a lot of activity, by the way, in the SPX. Holy crap. Ron, I actually appreciate you saying that because SPX is rocking today. 360,000 contracts have already traded. That means Spider's clear over 1 million already. Yeah, 1.2 million contracts already trading in SPY. Okay, this is not going to be a quiet day. So as I kind of dig into this a little bit, you know, you're going to have to deal with a lot this week, and I can't stress that enough. When I say you have to deal with a lot, okay, forget about advanced client, forget about all that. Look at the calendar. One of the first things you're going to have to deal with this week, and it's, be mindful of what's in front of you. And it doesn't matter what you think. Yes, there's an NVIDIA conference. Okay. What's going to take center stage first in the week is going to be this Bank of Japan announcement. The Bank of Japan announcement comes out at night. So you could actually see futures contracts move quite a bit this evening. The Bank of Japan, for the first time, okay, it's, argumentative, but the Bank of Japan might be raising rates. Yay! When everybody else now is finally talking about lowering rates, Bank of Japan might be raising rates, okay? Which then brings me, of course, to what do we got on Tuesday? We got nothing. Don't even tell me housing starts do nothing. Housing starts do not move markets anymore, okay? The next on the docket, of course, is going to be Wednesday. So know your calendar. Tonight, Bank of Japan could really start to move markets. By Wednesday, you have the FOMC, okay? Now, look, when it comes to the FOMC, let's again, I don't want anybody to think like they're gonna raise rates, they're gonna lower rates, okay? They're gonna raise or lower rates. No, they're not gonna do anything with rates. Nothing. Okay. They're not gonna do anything with rates. Why are they not gonna do anything with rates? Because it says a 99% chance, but that means nothing because there's gonna be a dot plot change. The dot plot deals with the crap that happens out here. Okay. I want you to see now that June has become 50-50. July is the first time that a rate cut is really on the table. This is a rate cut, okay? People, I'm just going to throw it out here. And again, doesn't matter what you think. I'm going to give you an opinion on this one, okay? And I want you to remember, the Fed this week could be more apt to talk about raising rates than cutting rates. You're like, what? You're out of your mind. Maybe, okay? But look where we are right now. You have asset bubbles everywhere. Asset bubbles are indicative, okay, of inflation. Everything you're seeing in the S&Ps right now, inflationary. Oh, wait, you think the Fed, okay, isn't sharp enough to pull up like a gold chart? Inflationary. It's insane right now. Oh, the Fed has even heard of Bitcoin now. That's inflationary. Everything you look at is inflationary. Inflation isn't just picking back up, okay? Inflation's getting extreme again. Okay. And maybe you haven't seen some of the numbers lately. Some of the numbers are just starting to amp up a little bit. Okay. We're getting inflationary again. And that is going to be a significant issue if they do not get their arms around it. So the Fed has, and again, I've mentioned this in the past, but the Fed has a dot plot. They're going to change the dot plot. There's no question about it. Maybe they show 2 rate cuts, maybe 1 rate cut. Okay. But I'm telling you, they're going to use a whole lot of rhetoric this week and things are going to get volatile and the market may be realizing that. Okay. But a lot of people say that tech, it doesn't matter. Tech is that good. It simply doesn't matter. Everything else might matter. Okay. But we might have an inflation problem once again on our hands. So the Fed has this dual mandate, and the dual mandate is keep inflation in check. Okay. And try to keep people employed, right? That's basically the dual mandate because they always talk about, I got a dual mandate. You know what one of the other mandates though is that they can't really talk about because it's not part of their supposed to be mandate, and that is asset prices. Okay. So historically speaking, the Fed, okay, has caused asset bubbles. Probably the biggest one that everybody would know in recent history would have been Alan Greenspan and the irrational exuberance comments. And his irrational exuberance comments, okay, first of all, you can talk about irrational exuberance clearly in the light of what happened with the internet bubble, but then we also saw a housing bubble. Okay, so we had the internet bubble. That was a big portion. The Fed was heavily involved, obviously, not only in starting the bubble, but popping the bubble. The housing bubble, though, was the biggest one, of course, in history, period. Like, it doesn't matter what you think about Fed. Low rates for a significant period of time actually sparked the housing bubble, which obviously came into 08. So believe me when I tell you that the Fed is watching the asset bubbles right now. And again, it's, this is not about PE. This isn't about anything. Okay. Markets higher are inflationary, period. Okay. A market that rallies is inflationary. The strong dollar, it doesn't really help their case either. You have a strong dollar in the last couple of trading sessions. I mean, holy crap, though, gold is actually up. There's nothing on this screen over here, okay, it doesn't point to inflation, and that's problematic. At what point, and I don't know if it's going to be this meeting, okay, is the Fed going to be like, and asset bubbles, all they have to mention is the word bubble, okay, and we're all in big trouble. But the Fed may spark some pretty significant volatility, which brings me back to the SPX. Forget about the SPX chart. I don't need no stinking chart. You know where the S&Ps are. They're halfway home to the upper edge of the expected move. But when you go to the SPX, close up this left side bar over here, start looking at the expected move. So today is the 18th, right? About a $19 expected move by tomorrow, $40 expected move. Take a look when we start getting into Wednesday. When we start getting into Wednesday, there's a $60 expected move between now and Wednesday. Okay. But I was mentioning this also in the weekend update. Anticipate this volatility to really pick up, starting to. It's already up to 18%. And that volatility is going to expand dramatically in the next 48 hours, right? Why it's going to expand is to keep this expected move near 60. But to the remainder of the week, there's still, you've already had $44 of movement, and there's still $75 of movement being priced in. So this is going to be a big boy week. There's no question about it. Now, of course, that could be to the upside, to the downside. But the marketplace is pricing in quite a bit of two-sided trade still. So volatility here is finally starting to back off a little bit. See how it goes. All right. I want to switch gears entirely right now. Okay. Okay. I want to switch gears entirely over here. Okay. By the way, Dawn was saying this is an election year. Okay. They will not be careful in an election year. Okay. I remind each and every one of you that you need to understand, first of all, Jerome Powell, okay, this is it. This is his last term. He doesn't give a damn. Jerome Powell didn't come in under the current administration. They actually came in under the previous administration. They don't give a damn. Okay. They're not going to leave things, any way other than what they want. So none, by the way, nobody that's in the present Fed is even being considered, for the new Fed chairperson. I don't know if you guys saw that, but this weekend they were actually talking about the new Fed chairperson. So I have heard that so many times. It's an election year, not going to do this, not going to do that. In recent history, some of the most volatile trading has been during the election year. Okay, obviously 2008, 2012 was still a crap fest. 2016 was hell in a handbasket. Okay, it just goes downhill from there. Well, let me remind you of 2020. Okay, every recent presidential election year, okay, in recent history has been insane volatility. Okay, just in my experience, and again, okay, in my experience, doesn't matter whether we're up or down, but in every recent, well, 2000, 2001, that was crazy. 2004, you got me on that one. Things kind of mellowed out a little bit. It all got crazy from there, though. Okay, in history of me trading, okay, all but one of election years have been hell in a handbasket in terms of volatility. Just going to throw that out there to you. Anyway, so S&P's continue to kind of bid back up. Right, and they're doing it now. Look at this on some size. Okay, we're going to talk about for the next 15, 20 minutes, just a bit, just cruising around here. We're going to talk a little bit about the atomic hedge. Okay, the market this morning, this is also rather frustrating. This is a vicious move right now back to the upside. We knew we'd get some pullbacks in here, but this is not nearly as significant as a pullback. Okay, and we're trading 52.32. We traded down to 52.23. So it's like that's a 10-point pullback, 10-point plus rally. Okay, that's not kind of the volatility I was looking for in here. But now the volatility itself is starting to get crushed, which is this rally. It's got teeth. It's got teeth to the upside. Oh, hold me. The day is far from over. Okay. I want to talk a little bit about the atomic hedge. I've had a lot of questions about it lately, and I think that this really does pertain to everybody. What an atomic hedge basically is, some of you have portfolios, long portfolios, short portfolios, whatever it may be, but the atomic hedge is designed expressly for a long portfolio. It can be used for a short portfolio. So let me give you just a quick example. If you have a portfolio, which many of you do, when I say if you have a portfolio, okay, what I'm referencing is you might have a 401k, okay? You could have an IRA, all right? You could just have funds, mutual funds, or you could just be long stock, okay? All of these could be sitting in an account that maybe you can't even touch. You can actually use what's termed an atomic hedge in a completely separate account. Okay. So the one thing is people look at their 401ks and they look at the 401k statements, and they completely forget about it. It's crazy because some people might have like 300,000, 400,000, maybe $1 million in there. Let's say you have like $200,000 in there. You have an IRA. You could trade in the IRA. You have mutual funds that you think you can't do anything against. The atomic hedge can reduce risk of any of these portfolios. Okay. I'm going to say that again. The atomic hedge can reduce risk of any of these portfolios, and it can do it basically in one trade, in one transaction. So I'm going to show you a little bit about the atomic hedge because there's a lot of people that have emailed me lately, and they have deep, concerns about the atomic, or I should say deep concerns about markets at these levels. Now, the atomic hedge, does it cap some of the upside? Yes, but it's relatively mundane. And what I'm actually going to do in this session is I'm going to combine what is the standard atomic hedge with another class that we've put together, which is called the income accelerator. Okay, so when we look at this, there's what we term the atomic hedge, and there's another class called income accelerator, right? And I'm actually going to combine these two. So what the atomic hedge is designed to do, right? So if this is, let's say let's make it a $300,000, long stock or funds, So you have this $300,000 long stock or funds portfolio. Okay. And I'm going to put it in just a little bit of a bubble here. All right. Because you don't even necessarily have to have access to it. What you can go out and do, okay, is you can buy a put against this. Now, buying a put against this, there's no put that says, hey, it's going to protect you, but there is. We can actually do this in the S&Ps. So we can buy a put. And of course, many people look at this and they think to themselves, why? Okay. Why would I want to buy a put when the marketplace is rallying? But the interesting thing is I've had more emails now about this than I've had literally in years. It's been years since I've had this many when people, okay, want to buy a put. Why? Because buying a put is a natural, okay, hedge. If this marketplace declines and declines substantially, okay, the purchase of the put will reduce the risk of the $300,000 portfolio. Is everybody comfortable with that idea? Okay, buy a put, reduce the downside. What is the problem with the put? What's the problem with the put is, okay, it's a heavy cost. The heavy cost of the put, and I apologize, it's hard to read that, but the heavy cost of the put makes it like, is the juice worth the squeeze? Well, we're going to go out and we're going to finance this, okay, by selling calls, okay? And we're actually capable of selling quite a number of calls to be able to finance the heavy cost of the put. Now, calls trade for a lot less than a put equidistant. So if I went out and looked at a put, the cost of the put could be double the sale of the call. It's okay. We're actually going to go out there and sell a bunch of calls. Let me show you in context how, okay, the mechanism works. I'm not going to get into every single nuance, but again, because these nuances actually, of course, are brought up in some of the archives here at TheoTRADE, but I cannot stress to you enough that at a time like this, where you're literally sitting at all-time highs, the interesting thing, okay, and when I say we're sitting at all-time highs, like I'm not kidding, like, I mean, I couldn't have been more timely with this discussion over here because you can hit an all-time high like right now. The interesting, I think, facet of this discussion is that most people do not think of risk reduction at a time when you're trading at an all-time high. But, okay, I've had more emails about this now than I've had in years. And I found that both interesting and alarming because what the hedge allows you to do, and just to put it into context, because this session that I'm doing about atomic hedge, it's not about every nuance of the atomic hedge, right? The session that I'm doing right now about atomic hedge is to bring you into the scope of, okay, what it is, okay, why you might want to use it, the logic of it, okay? But when markets are sitting at all-time high, that is the time to use the damn atomic hedge, not when we start breaking down, because by the time we start to come down, okay, and I always stress this to people, okay, by the time the marketplace really starts to come down, it's far too late, okay? It's when you think of hedging, all right, hedging is, especially against portfolio, and FINRA and the SEC hate when I say stuff like this, and believe me, I've had conversations with FINRA many times. Buying a hedge, okay, is like buying insurance on a house. Okay, insurance on a house is all well and good, unless, of course, there's a fire in the distance and you see the fire coming your way. You're like getting on the phone. You're like, "Excuse me, need to buy insurance." Okay, fire coming this way, and they go, "Sorry, insurance market closed." By the way, I kid you not, I had an incident. It was about 2-3 years ago. I have a house up in the mountains here in Arizona, and I was up for insurance renewal. Okay. And I had one insurance policy that was lapsing, and another insurance policy I needed to get in place. Okay. But I couldn't freaking find anybody to give me insurance because there were gigantic fires burning at the time. Gigantic fires. There was like a 40-mile fire. It's one of the biggest fires in Arizona history, was burning at the time. It was kind of coming close to us. Any regard, I couldn't get insurance. And then they forced me to get like this, coverage lapse thing. It was, what a pain in the ass. Okay. But it was like the perfect like analogy in my head. By the way, they ripped me off good. They're like, "You want insurance?" They're like, "There's a fire right there. You think we're stupid?" Okay. We smell the smoke. Anyway, you insure, okay, when volatility has come off. What's so weird right now, though, is you kind of have like anybody seeing this since the beginning of the year? Markets are rallying with volatility. Far be it for me to say this, that's a trend to the upside. I'm not your market technician, but that's a trend to the upside in volatility. Nevertheless, okay, it's a good time to hedge. Where can you hedge? Now, depending upon the size of the portfolio, I'll start in the ES, okay? Depending upon the size of the portfolio, first of all, hedge. I like to make my hedge. I like a nice hedge as much as the next individual, but I like to make my hedge not too far out in time. You know, you want to go like 43 days out, it's fine. Okay, I'll open up a couple of contracts over here, but it's kind of weird the first time like I bring this up to like show people like how to hedge and so forth. If you've never done this, okay, it's a little bit new to you, right? So let's go 43 days out. Let's look at the cost of a put. So down here at like 51.50, okay, it's not that far out of the money, but it's like $50. Like raggy, okay, that's a lot of money. You probably have to go somewhere near like the 30 delta. Now, there's a couple of different ways you can hedge. Okay, there's a couple of different ways you can hedge. You can buy just an outright put. So you can buy an outright put. And buying a put, you're going to pay $47 for that put. Okay, but a lot of people don't know in the ES, what is this put even worth? What do you mean? What is it worth? Okay, how much does this put hedge? Like, does this put hedge a lot? Does it hedge a little bit? Okay, that's the one weird thing about the ES. Like, what's an ES even worth? Okay, for those of you that don't know this, in the ES, okay, look at the product. It's a $5,232 product. Multiply that times 50. Why? Because that's the contract multiplier. Every one ES equals $261,000. Okay, so if you buy a put theoretically in here, okay, and the market starts crashing, you know, this is the kind of hedge and kind of bang for your buck you're getting, $261,000 a hedge. Okay. And you're like, well, okay. And it's kind of a weird way to figure it out. So we could do this in the spiders as well. And maybe tomorrow I'll tune you into the spiders. But what I'm trying to get at is these ESs, okay, this kind of gets the job done, man. This thing it's just getting it done. But anyway, let me just bring up another put. So I'm at the 5120 put. It costs $47. Okay. But it doesn't really cost that because we hit confirm and send. When you hit confirm and send, it really only costs, okay, about what? $2,350. So I need to figure out a way to finance this. Okay. I'm not a big proponent of just going out there and sell a put and sure buy a put and without selling something against it. So we're going to use a little bit of what we term, okay, the income accelerator. And the income accelerator goes out and sells out of the money calls. Okay. But okay, you're going to need a bunch of these calls because how many of these calls you're going to need, okay, to make it worth your while? And the answer is probably about 3 of them. Okay. So if you look at the hedge, and again, I'm just building you one on the surface, quick and dirty, right? I'm going 100 days out to finance, okay, a 43-day put. And I'm doing this, okay, just to cause, again, a little bit of conversation in here, just to cause, though, a little bit of risk reduction. Now, this hedge is, it's not the end all be all, but this is the kind of thing that can reduce risk, but it's only going to reduce risk for the next 43 days. It's still, though, kind of crazy, a little bit expensive, but you see like 3 of these calls sold, okay? 3 calls sold, finance 1 put. The problem is, though, these calls, you're probably only going to make about half the money on them. That put, though, you're going to lose the full amount, which brings me to my next point. The puts these days are so freaking expensive that you might want to consider, instead of just buying a put, you might want to consider using 100-point wide, okay, spread in here. And the spread will only cost you about 18K75 like debit. And then you can turn around and finance it and still sell 3 calls that way. Okay. And again, I'm bringing up a multitude of trades and I'm just ripping through it really quick because I just want you guys comfortable with the logic of it. Right. And then we can get to the nuances and so forth later. And the logic of this, okay, is quite simply, let's go back to the delta over here and we sell 1, okay, of these, maybe 2 of these, even 3 of them. This would be like I would say the newer version of an atomic hedge in a marketplace that's rather volatile, if you will. Okay, because we have upside volatility right now, but you want to hedge. But this hedge down below only gives you 100 points of protection. But if the market continues to crash, you can pick the hedge up and roll it down, and pick the hedge up and roll it down. Okay, similarly to what we would do in the inflection point spread class. But this is the way to actually finance, okay, your put position. Okay, this is the way to finance your put position. And we're choosing different expirations simply because we're using a high gamma, okay, in the put that you're buying against a low gamma in the call that you're selling. The decay rate of the call you're selling, though, is phenomenal. Even though this call is 100 plus days out, its decay rate is excellent at this point. And I do mean that, excellent decay rates out of the call. You're only trying to make about 50% in the 3 calls that you sell. But in the 3 calls I sell, like if you looked at this and averaged the price, let's just average the price down to like 15. Okay. 15, times 3. So you're collecting $45. You collect half of that. You're making like, 20 some odd bucks. It totally finances it. Okay. And this should decay. 50% decay should be achieved in less than 43 days. Okay. If the market keeps running up, you could ratchet the entire strategy higher. You can even roll the calls out for credit. There's a lot you can actually do. Okay. Hedging at this point is probably a very good idea. Okay. And again, I'm not going to sit here and tell you, you need to hedge, you need to do this. If you have, if you're uneasy about a portfolio, people have a very tough time. When I say uneasy about a portfolio, what does that mean? Okay, should I get rid of the portfolio? Should I do this? Should I do this? Should I hedge? Look, all I want to do is reintroduce the hedge because there's some people that are here at TheoTRADE that maybe weren't here. I did the atomic hedge, the original atomic hedge class years ago. And you know why we did the original atomic hedge class years ago? Because the markets were insane. Okay, insane to the upside, insane to the downside. And the original class, all right, reduced risk through some really tumultuous periods. Okay, there was also, we taught hedging like literally during this. We exploded back up and things got crazy again. I mean, we've been through this time and again, but I want to reintroduce it and give you a little bit of a twist because you put the atomic hedge along with income accelerator, and I can give you all the little nuances in there, right? I think that that's so important, though, in a marketplace that's at or near, if you will, all-time highs. And I like to stress that to people that you don't do this and we don't talk about it when the market's coming down. Like at that point, it's too late. At that point, we can talk about other, like volatility type strategies, right? It's just, by the way, there was a question in here, is the put ratio back spread in the SPY an option? It's not a good option. Back spreads for hedges are not great options because the skew is dramatically against you. Look at this, okay? We are vicious right now to the upside. Volatility, though, it's coming down, but it refuses to collapse, okay? This is a very, very, sketchy day. And sketchy to the upside, don't care what you think, okay? This is sketchy day. This is volume raging to the upside, okay? And what we have over here is all the volume that you're seeing that dissipated and then came back. This is just hedging activity. Okay, it's all hedging activity. Everybody's chasing the trade to the upside. Interestingly enough, look what's happening to NVIDIA. NVIDIA is not only not participating, it's actually cooling the market off a little bit in this case. It's everything else that just came back to life. So stocks that have been beaten down and bludgeoned, they've actually come back to life. Oh, how scary that Microsoft even rallied out of this, okay? It's AI. So the People's Republic of Google. Oh, man. Okay, they are not getting my data. You are not getting my data. I'm sure they already have my data. Okay, I don't want them to have it, but they have it. Oh, man. I was actually, so we're kicking out, one company to invite, what? It'll be Microsoft, Apple, little Amazon, some Google and Meta. That's it, people. That's it. That's what the world's going to come down to. Okay. It's still like, all restaurants are Taco Bell. Oh, it's even worse than that. Okay. Yeah, wait until Google starts taking over the fast food industry. Okay. All restaurants are Google. All right. After the fast food wars, every futuristic movie though that you see, okay, screwed up dystopia. We're there. We're home. Okay. Black Mirror, they don't need to write that crap anymore because we're here already. Okay. I actually like that show. Some of them. Some of them. If you've never seen that show, you're missing out. Come on. Okay. The newest episodes were not that good, but the previous stuff was great. That's because we're living there already. It's good stuff. It is Demolition Man. Yes, I was talking about all restaurants are Taco Bell. That's why I always think about like the future that way. Okay, is that there's nothing. You've got basically a handful of tech companies, and I was at Apple because it's not Google. I'm serious about that too. Part of the Apple ecosystem, because like Google makes me want to puke, especially like Android. There's a long story behind why I dislike Google so much. A long story, and it has to do with how they store data. But I could spend some time on that one in another session. Anyway, I've only got 2 minutes to go, and I do have to turn it over to the professor. Jeff Bierman's going to be coming on here in just a couple of moments. By the way, and forgive me for this, when we switch from one presenter to the other today, things can get a little ugly. Get a little ugly. We haven't really figured everything out yet on this new system over here. Okay. So anyway, this is, when people talk about the term classical term, the term short squeeze, okay, when it pertains to the marketplace is kind of ridiculous. What you're in the midst of right now it's gamma, like you can call it a gamma squeeze if you want. And yes, there's people caught short in there, but everything that you're seeing on the screen right now, it's predominantly gamma. And what gamma basically does is it drives market makers to have to buy stock. They have to buy S&Ps over there, and they just drive markets higher. Okay. The scary thing though in trades like this is as we go to the upside, categorically speaking, you should see volatility drop and drop substantially. It is starting to drop. It is starting to drop. Like vol starting to come in, but it's not enough. Okay. It's just not enough in here. So again, you have to be aware of just that, right? That look, this marketplace is volatile, okay, but it's volatility to the upside. You almost have to redefine what you know a little bit about volatility. Let's prepare. Preparing for the professor. Jeff Bierman will be in here momentarily. By the way, he's going to be talking about distinction, extinction, tech brand names that went spectacularly bust, part 3. I'm going to bring Jeff Bierman in here momentarily to kind of kick things off for his session. It's going to take us, just bear with me, it's going to take us about 2 minutes to 3 minutes to get Jeff on. By the way, okay, I cannot stress this enough. I'm going to leave you with this thought. Expect markets to actually have these dramatic and vicious, okay, pullbacks throughout the course of today. There is something on the tape, that it's just like volatility still doesn't look right. Okay. The sectors that are higher, there aren't sectors higher. There's one sector higher, right? The advanced decline line in here today is sloptastic over here, but it's just you have a handful of stocks that are running the roost in the marketplace. If Nvidia comes in, it actually causes the Nasdaq to pull back a little bit at some point. But one of these big tech stocks is going to go for a ride today. Speaking of a ride, check this out in Tesla. Okay, just put that trade on Friday. Okay, it's gold, Jerry. It's gold. Anyway, stay tuned. Jeff Bierman will be on here. Just give us about 2-3 minutes. He'll be in here. Thanks, everybody.